Hello everybody, it's time for the weekend edition of our market briefing. So let's get right into it. We'll just go through our disclaimer real quick though. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. Alright, let's take a look and see what we've got coming up this week. On Monday we've got nothing, but other than that, it's actually a pretty important week, as you'll see. On Tuesday we have the IBD Economic Optimism Survey. I've never paid much attention to this, but I suspect that this time around people will be paying attention to this. So it'll be interesting to see just sort of where this number falls. And see basically how people, the general public, feel about the economy. On Wednesday we have the biggie, CPI, Consumer Price Index, the inflation report. We're expecting this to come down. Not a lot, but it is expected to roll over and be less than last month's report. Both on a year-on-year basis and a quarter-on-quarter basis. If this does not come in lower, if this comes in higher, especially after the non-farm payrolls report that we had on Friday, I think that could be very bad for the market. So we really want to see this come in either at expectations or below expectations. I think the market would rally quite strongly, and you'll see how we're kind of set up for that when we take a look at the charts of the major indices and a lot of individual stocks as well. On Thursday we have the Producer Price Index. There's basically another inflation metric that is closely watched. A lot of more professional traders and that fed themselves watch the PPI more so even than they watch the CPI. The PPI is a bit more leading than the CPI. Also on Thursday we have unemployment claims. On Friday we have the University of Michigan Consumer Sentiment report and also the inflation expectations. So you can see it's interesting this week because we've got a couple of pieces of hard data, really important hard data on the economy, and then we've got sentiment data on the economy. So we get to see how is the economy actually doing, or how is inflation actually doing, and then what do people think about this? So it'll be really interesting to compare the two sets of numbers and see what we come up with. Earnings season is still pretty busy, although winding down a little bit. We're definitely getting into the second and third tier names. We kick it off on Monday morning before the open with Palantir. I'm going to be watching this closely. We're going to actually take a look at the Palantir chart a little later on. We were looking at that last week as well. So let's take a look and see how that one's doing. But I'm not sure exactly what time it comes out on Monday. I don't know if we'll have time to trade Palantir before the earnings or not, but it's definitely worth a little bit of a watch. Berkshire Hathaway, this always says Monday before the open, but Berkshire always reports on Sunday. I haven't seen anything from them yet, but I haven't really been looking either. So this is important earnings, very closely watched by a lot of people. I have a small position in BRK.B. Upstart is one after the close on Monday that'll be closely watched. And you can see the bunch of second and third tier names there. On Tuesday before the open, Norwegian Cruise Lines. If you're into the cruise lines or hotels, that seems to be kind of Tuesday mornings. Cruise lines, airlines, hotels. A bit of a theme there on Tuesday morning. After the close, I think is a lot more interesting with Coinbase, with Roblox. We're going to look at the Roblox chart later, and the trade desk. Really closely watched big names here, and you can see even with Plug Power and Unity and Wish, Celsius. I should have highlighted Celsius. I'm sorry about that. Celsius, the most important name on this whole page. And we should probably look at that Celsius chart later too. What do we got on Wednesday before the open? Nothing much that really interests me. Let me know if there's anything in there that interests you. After the close on Wednesday, we've got Walt Disney. We have Dutch Brothers. I know a lot of people like this as an alternative to Starbucks. And some other sort of third-tier names on Wednesday after the close. Not much very interesting at all on Thursday morning, and really the only thing that I find terribly interesting on Thursday is Rivian, although Sierra Wireless is probably somewhat important as well. And then on Friday, I haven't heard most of these names actually. So there you go. That's it for earnings. All right, let's take a look at the major indices, some important commodities, some sectors, see if there's any nice setups. Not sure if you remember, but last week during the session, something weird happened with my e-signal, and it lost a whole bunch of indicators on my charts and a whole bunch of lines off my charts. So some of these charts won't have as many lines as you're used to seeing. I've gone through and rebuilt the important ones though. So we'll get right into that right now, and of course we always start with the S&P 500. So this is the chart of the SPY, SPY ETF, which represents the S&P 500 index. And as you can see, we basically had a consolidation week, which I think is great. You know how I love to see a consolidation after we make a big move up. And we're consolidating right at resistance. You can see we're consolidating where we were before this consolidation, right up into at a resistance zone and very near the high of that. Now, you might be looking at this and going, wow, this consolidation looks just like that consolidation. Does that mean we're going to drop out the bottom of that? And that's, it's entirely possible, but I don't think so, and here's why. Look at the difference. Look at the difference in the behavior leading into or for the month before that consolidation. Okay, so we had, we had a major downtrend. We have lots of big red bars, and we moved up a bit. We had that bear market rally. We consolidated, and then we fell off a cliff again. Well, now we've, had a bear market rally. We had a big wide consolidation, put in a double bottom, moved up, had a little bit of a pullback, moved up again, another leg higher. So this really, in this, if you call this whole structure a rally, this is our third leg up in this rally. And we're consolidating now, right where we should. There's resistance there. Now here's something really interesting that I read a couple of days ago. Apparently, there has never been a bear market that rallied 50% or retraced basically 50% of the decline without continuing higher. And that was basically the end of the bear market. And you can see I've put Fibonacci's on here for no other reason. It's just they're an easy way to measure. I'm not really doing anything with the Fibonacci's other than looking at where the 50% line is. And it's this red line right here, and that's at S&P 500. Or SPY, 422. So that is a 50% retracement of this move from the all-time high to this low here. If we get above 422, it's very, very unlikely that we pull back and make a new low. That's never happened in a bear market before, once we've closed above that 50% retracement. So we're really close to that, and it's not going to take much. A little breakout of this consolidation, say on a lighter than expected CPI number, and we're going to go through this. We're going to go well through this, probably up into, if it was on the CPI number, if the CPI number came in a lot lighter than expected, I could easily see us getting back up to the 200-day moving average here, which is around 433, and maybe even to this resistance at 437. So I think there's lots of reasons to be cautious here, and we could roll over. I think that we have to, we've got to watch, we've got to watch these reports closely next week, and if we start moving up and out of this range, I think that's a very viable breakout. and we can finally say that maybe the bottom is in, and we've seen the end of this bear market. We're getting really close to this, I think, but we still need to be cautious. Okay, so let's look at the Qs. So you can see the Qs have moved up nicely. Really nice rally in the last 2 weeks. We'll just zoom in a little bit more here. You can see I had drawn in a cup and handle on the Qs, and sure enough, they seem to be making this cup and handle and breaking out of that now, breaking above this resistance zone. Broke out on Wednesday, and pulled back to that former resistance, now support, and look ready to maybe move higher. Now there's going to be a fair bit of resistance overhead here between about 340 and 360. But let's cross that bridge when we get there. Our next area that our next zone that we want to get to and maybe consolidate under is around this 340 area. And I forgot to mention with the when we were looking at the SPY, I wanted to look at this intraday because I wanted to talk about that non-farm payrolls report. That report. So we're looking. If we look at the middle chart here, I know this is kind of messy. It's got a lot of lines on it, but just kind of try and ignore those lines and just look at the price action here. Okay, so that report comes out at 8:30 in the morning, which is this giant red candle here, of course. Now, the non-farm payrolls basically came in double the expectation. So the economy created twice as many jobs as expected last month. So that's you're probably thinking, wait a minute, but that's really good for the economy, right? And that is very true. And there are times, and I mentioned this in the Discord, up until 6-8 months ago, anytime a report like that came in, the market would have jumped up 2-3% that day because it's so good for the economy, which means it's good for all of the stocks that we invest in. But right now it's different because we're just so concerned with inflation and rate hikes and potential recession, that when that number comes in so hot, all we think about is more rate hikes. And you could see that instantly in the pricing of rate hikes for the next meeting. The probabilities for the next Fed meeting were for a 50 basis point rate hike. And that flipped within an hour of this report coming out. That completely flipped the other way and went to 75 basis point rate hike. And that's what you see being priced in here on this big decline. So you can see in the pre-market we had this big decline. We came down, and this 409, I believe, was the previous day's low, or maybe it was 2 days before. I think this is the Wednesday. So this is Friday morning. I think this is Wednesday's low. We can actually see that right here. Yeah, okay, just below it. But when we opened, this is the opening, this big green bar here, that is the open. They bought this at the open and they didn't stop, and they moved it all the way back up. We actually almost went green on the S&P 500. We did go green on the IWM. It was choppy the rest of the day, but this was all very positive price action. It pulled back hard, but they bought it again. They bought that dip. It pulled back, they bought it again. This is what buy the dip looks like. Very bullish price action. So I just wanted to make sure that we took a look at that because nobody would have blamed you for being extremely bearish in the pre-market on Friday morning after this report. All right, let's move over to a daily of the IWM. And we can see that the cup and the potential cup and handle I drew in here ages ago is still forming nicely. So we've got a really nice cup now. We've got consolidation just under the rim of the cup. Now we could, maybe this is enough of a handle. We generally like to see more of a handle than this before it breaks out. the handle can go sideways, or we can pull back a little bit. I think I'd prefer to just see a couple more days of consolidation in here. Let's say consolidate Monday, Tuesday in this range, maybe even nice and tight up near the top of this resistance here, and then break out and start moving higher on that CPI number. That would be ideal in my opinion. If we look at the micro caps have been doing quite well as well. Nice rally going on in here, almost like a similar cup and handle going on here. That one I would probably draw, from here. Oops, that's not quite right. But, there's definitely a cup here. We don't have a handle yet. But we don't necessarily have to have a handle. Sometimes you get the cup and then you get the breakout. So that's something to watch for in those micro caps. Volatility index. The volatility index is looking very bullish. Or bullish for equities, right? Not bullish if you're long volatility. You can see that we had, we had formed this great big triangle here, and then a smaller triangle within it that we broke down out of. So let's get rid of that one. Now, just in the past week, or I guess it was week before, we broke down out of this bigger triangle and then went right back up into it. And we've since broken down out of it again. We're still above that $20, that important $20 support area, but it's this is just declining, nice and smooth, nice declining channel on the way down here. Let's take a look at this channel on this. Nice, good, clean action here. Nothing to worry us going on in the VIX right now. And even, even with that CPI print, VIX didn't actually jump up, or not the CPI, the non-farm payroll on Friday. VIX really didn't jump up that much, and it sure gave it back quickly. So that's awesome. That's definitely something we want to see. A little more concerning is our yields in the bonds. They jumped up on Friday and continued to go up most of the day. Now they're still in this downward channel. There's still a little bit of room overhead before they come into resistance, and what we'd like to see is this to roll back over, because it's not you generally don't see, or at least in this market regime, this inflationary market regime, you do not see yields going up and equities going up at the same time usually. That is unusual behavior. So we definitely want to see these yields roll back over. All right, let's take a look at we'll move over to trading view so we can take a look at the dollar index. And we can see that the dollar index jumped up on Friday. Again, not something we really want to see. We'd like to see this, this rolling over, moving down. When the dollar index is going down, this is good for equities. This is good for North American equities, and this is good for emerging markets and basically the global economy as well. When this dollar is declining. So, but as you can see, it is coming into support here. So we'll be watching this closely over the next week to see where this goes. I suspect that, or I'm actually quite sure, if the CPI comes in light on Wednesday, that we'll see this dollar index come down, maybe even as far as 104, or 103.80 or so, and test this support line. Let's take a look at our DCA timing tool, our dollar cost averaging timing tool. We can see, remember last week, this crossed over. You can see the MACD line crossed over the signal line, and we moved above the 100-week moving average. So, or sorry, not the 20-week. The 20-week moving average is the one that we crossed over, and turning our DCA signal green. So if you're dollar cost averaging into any index funds or sector funds, You've been given the all clear by this indicator to do that. And the same goes for the other major indices as well. In fact, they crossed over a week earlier. And you can see that they're still nicely green in here on this indicator. So all systems go here. Okay, where to next? Let's take a look at gold really quickly. I don't think there's much to see in gold. We've come up into a resistance area. Maybe this, people might call this a bit of a bull flag. It looks a little messy for me. I don't think there's anything to do here. This doesn't look terribly exciting. The miners are definitely underperforming the commodity itself, so that does not bode well for the commodity. Silver came up into minor resistance and then pulled back, but you could say that this is drawing a bull flag. I mean, this is a bullish looking pattern here. Actually, let me draw a couple more lines on this one, so you can see that bull flag clearly. Right under the on the bearish side of this, right? This failed at the 50-day moving average and at minor resistance. On the upside, you can see that it bounced at the 21-day moving average on Friday, and that it is drawing a bull flag, and we expect that bull flag to break out to the upside. And an upside breakout would take it up to probably beyond this pivot here, right into maybe the 200-day moving average. So if you're inclined, to play silver, you might want to watch this, and maybe watch like the better way to play it is probably SLV, the silver ETF, unless you're really daring and want to play the silver futures, but that's not recommended for most people. Copper futures. So copper is also, you can see, drawing a bit of a bull flag. And, maybe even broke out of that bull flag on Friday. Would be really interesting to see this move higher. As you know, copper, we've talked a lot about copper. Copper is a bit of a bellwether for the economy. If copper is declining, then we're all definitely concerned about the economy. So it's nice to see this coming off the lows and then drawing a bull flag. I'm not sure if I'm ready to jump back into this. I'm unconvinced at the moment, and I think that if we see any weakness in the equities market, if equities do roll over and we're back into having concerns about when is this bear market going to end, I think we will see copper roll over as well. So I don't want to start getting into copper plays and then end up taking a double hit like that. The DBC, General Commodities Index. You can see we've talked before about how this has found support at the 200-day moving average. Well, it seems to have found support there again on Friday. Now, we kind of want to see this roll over because if commodities are going up, if commodities are becoming more expensive, then that is inflationary. And we don't want that, do we? All right, agricultural commodities. Agricultural commodities are pretty much building a base in here. This is fine. There's nothing to do here, nothing really to see here. Okay with them making a base here. But it would be nice if they rolled over and went down even further. If agricultural commodities roll over and come down further, we may actually see decreasing food prices, which would be really nice to see. Oil. Okay, so that long term I'm bullish on oil and short term I'm bearish. I've mentioned that many times. We, in the last week, have really broken through a major support level, this level in around $95, and we have now broken through, that line should actually probably be up closer to 90. Well, the 90 to $89 area. I've tried to break through that. It seems to be trying to find support here at 89. I don't think it's going to recover and rally. I think that maybe it might rally up to 95 and roll over again and continue this downtrend. I think that what we need to see here in oil is capitulation. We need to see the same sort of capitulation, by the way, that everybody's still calling for in the equities market, that I don't think we're going to get. But that capitulation probably looks like a sudden move. We'll say we start drifting down. I think that if we get to this level, this 85 level, and break the 85, then we could see big, a couple of days, 2-3 days of big red candles, followed by a big bounce and really big volume as this happens. That would be the sort of capitulation that would get me interested in playing this again. But for now, I don't want to be touching oil or any of the anything in the energy space, really, or not the traditional, the oil-based energy space. You can see XLE, the companies involved in this space. They did have a nice rally. They rolled over. Friday they started to rally again. Is the 200-day, supporting? Is this support at $70 working? Hard to say. Like I said, just like in oil, we might move up into that level above and then roll over again. And the oil producers, whoops, looks very similar to XLE. The oil services ETF, again similar, underperforming the others. So it just, this is all kind of saying more weakness ahead. TAN, on the other hand, the solar ETF, is building an interesting base here after gapping higher on the I can't remember what the name of that bill's called. I think it was the anti-inflation bill or something, but it's got subsidies for putting solar panels on your roof and whatnot. That's what caused this gap up when that was passed through the House and the Senate. I'm not sure if Biden has signed this bill yet. I don't think he has. I'm sure he would have made a big deal about it if he'd signed it. Got a base going on here. This TAN ETF and solar in general is so volatile. It's hard to play. But a breakout of this base could be good for another leg higher, certainly up to 92, and maybe even to test these all-time highs near 100. Okay, let's move on to consumer discretionary. Consumer discretionaries have had a really nice rally. It made kind of a triple bottom, or you might even want to call that a rounding bottom. Moved up, and just is continued higher. This is great. This is healthy for the market. It's hard to believe that we're in a bear market when you see this kind of price action in consumer discretionaries. It's also kind of hard to believe that a recession is coming, or that anybody's fearing a recession when you see this kind of price action in consumer discretionaries. I think for next week, if we can get a little consolidation here, we need to maybe start looking at some of the stocks in this space. Industrials. Nice little consolidation, bit of a flag going on here. I know that we were looking at this flag down here. I'm not sure if anybody played the breakout from that one, but we've got a very similar flag. Let's get these drawn, and this is one of the charts that I lost everything that I drew. And I'm not, the industrial is not my favorite space, but it's looking, this is a nice little setup right here. So would prefer to see another tight day like we did on Thursday before that breaks out of there. Maybe the industrials, maybe look inside this ETF and go fishing in there. There might be some nice prospects in there. And if you do find any potential swing trades, let us know in either the short-term trading channel or tickers you're watching. Financials. So I was watching this space fairly closely because it looked like it was ready to go. We had watched this little base here. Draw that one. This was nice because in the past week we've got this base on base kind of action. I tried to play JPM, got stopped out on a wick. That was a bad beat. That one. We'll look at that in a sec. But the financials ETF looks ready to go as well. And I do like the base on base like this. This stair stepping upwards. It does have room ahead to move, but I'm just not sure how to play it. Some of these banks just trade funny. So here's JPM. I went in, originally had been looking, we should probably zoom right in on this here. And we talked about this in the ticker talk too, I think, on Thursday. But I went in early on this, down near the bottom of this consolidation. My original plan was to have bought a breakout, but I kind of like the way it sort of the price action off the bottom of that consolidation. Well, then it broke down through there, and the trade obviously wasn't working. And then on Thursday, I got wicked out on this move. I had to respect my stop there. Unfortunately, it within a couple of hours of stopping me out, it started moving back up, and then of course had this beautiful day on Friday. But it still hasn't broken out of the original level that I was watching. So JPM is not the one I want to use to play this, if I'm even going to play in the financial space again. But again, there might be some plays in there worth looking at. Technology has been doing really well. Now you can see this downtrend line from the highs back in December, and we have come right up to that and are now pausing, at least pausing for a couple of days, and that is just sort of right under resistance as well. But this has had a really nice rally. We rallied up, we'd had a little 3-day pullback, and then we rallied right back up again. With a couple of 2-day sideways consolidations. So is this just another 2-day consolidation and then move up? Or is this going to be, do we, put in a couple of more days here as we wait for the CPI number? I think we put in a couple more days sideways. Maybe even pull back a bit if people are nervous about that CPI number. But this certainly looks like it's ready to go higher. Communications sector. Remember, communication sector has got Facebook in it, Meta. So it's definitely underperforming. Meta is dragging this down, but it's trying to get up here, right? We've put in this nice space, and now we've got a series of higher lows in here. We've got this ascending triangle. Does it break out and go higher? I suspect it does, but it's going to need help from some of the stocks in that ETF. We'll look at the FAANGs now. Here's Apple. Beautiful move up. Look at this. This is really kind of when Apple turned around here. This is when the whole market started to turn around off that June low, right? And it really hasn't looked back. It had to move up, a little bit of a pullback, move up, pull back. It's stair stepping up beautifully. Doesn't look like it's stopping to me, and we're not that far off of all-time highs now. How much farther do we have to go? So from here, from our Friday close, we're only 10% off the all-time high. This is an excellent recovery in here. And I remember people have been saying that the bear market's not over until Apple capitulates. But this does not look like a stock that is going to capitulate to me. I suppose if I'm Michael Burry, then I think and he is out there saying that this is a sucker's rally that is sucking everybody in, and the worst is yet to come. So be aware of that. There are mega bears still out there. I can't count myself among them, although I'm cautiously bullish. All right, let's look at Amazon. Amazon making a nice move up. Gappy, which is just so unlike Amazon, but this gapped up on earnings. Continues to move higher after that gap up. Paused on Friday. There's nothing wrong with Amazon going sideways for a few days and taking a little break here. It's made a nice move. Let it digest all of this before going higher. Meta. Let's zoom this in a bit and get rid of the ugly bit. This is still building this space. So at least this isn't going down anymore, but it's not really going up either. You can see when it tried to break out of that base, it pulled right back into it. We're right at that 50-day moving average. We've got this downtrend line to the top of the base. You got to think that this rolls over now. I wouldn't be at all surprised if it rolls over to the bottom of the base and then moves up again. Now, if the market takes off and starts to rally on CPI, then maybe this doesn't even reach the bottom of the base here before it takes off and finally breaks out of here. Yeah, not something I really want to play with. Netflix, on the other hand, is something that have been watching really closely. That we had talked about, we had looked at this part of the base right in here. Let me highlight that again, because we've been watching this part of the base in here for a breakout, and it did break out. It took another leg up and has gone nicely sideways, building another base, and now has been for 1, 2, 3, 4, 5, 6, 7, 8 days been consolidating in the top half of that base. If you're a swing trader and you don't want to jump all over this on a breakout, you can't call yourself a swing trader. So I'm going to be all over this. When this breaks out, it's also going to break above that declining 100-day moving average, and it's going to move into that giant gap down that it had. Now, all of that could act as resistance. We could get a failed breakout out of this. It is kind of obvious. It is the sort of breakout that fails, but at least it's nicely risk-defined, right? The risk-reward ratio on this is huge, because even a conservative target basically is the top of the gap here, right? This pivot from back here is our target at 330. So that is almost $100 move in there. And you only have to risk, you can see I'm going to enter at 232.30, and my stop is going to be 218.80. So I'm risking, what am I risking there? $14 to make almost 100. That's a really, really good risk-reward ratio in my opinion. So I've got to take that trade. And I should be able to, because I think this is going to move quickly. I should be able to tighten my stop up fairly quickly as well. If this goes, I may even be able to, after the first day, get my stop to above break even, or very near break even. So I'm going to be watching this closely. I'll be calling it out in one of the either tickers you're watching or in the short-term trading channel. If this goes, it might gap up, and that's something I need to think about how I'm going to handle that. If I'm going to chase it if it gaps, I probably will, because I really think this could be a runner. Google. So this is one of the stocks that's holding that communications services ETF back. It looks like it could be ready to break out. I would much prefer that breakout in Netflix to this breakout, because this kind of like Meta looks like it could also very easily just roll over, right? But I think, again, this just needs a catalyst like a nice CPI number to bring it out of this range and take it out of this space. It doesn't look unhealthy or anything. I mean, this is a very healthy looking base, a very healthy looking bottom, but it just looks like it could take its time getting out of here. Let's take a look at Tesla. So this is interesting. Tesla, obviously affected by the bear market, had a nice base. I think that before we probably had this kind of this pennant drawn in here. Actually, I don't like it that way. Oops. Oh, that was better. Yeah, I think you know, that it broke out to the upside of that. It's left a gap down here. Let me actually draw that in, because there's a chance that this comes into play. If my I'm going to share with you a little bit of a thesis on this. So you can see that, you know, nice rally in here. I mean, everything looked nice until Friday. And I think that on Friday, I think that more the talk about Elon being forced to buy Twitter is becoming stronger, as some really smart people are expecting that Elon is going to have to buy Twitter. And that is why I think we had a big red candle on Friday. And if we look at Twitter, whoops, you can see that Twitter has been stepping up nicely and had a nice big green candle on Friday. So you can see that, you know, big green candle on Twitter on Friday, big red candle in Tesla on Friday. So interesting here. I think that this Twitter narrative is going to hurt Tesla. And we could see more downside here, even if the market is on the way back up. That's definitely something to watch for if you're in this stock. You know, I don't think that... I'm not like long-term bearish on Tesla or anything like that. I think that Tesla will recover from this. If this move down, if there is a move down based on Elon buying Twitter, eventually Tesla will recover. And who knows? I mean, maybe it gives us a nice entry. You know, comes down into its former gap, or comes down to the apex of this former triangle, or major support down in here around 700. All of those could be good buying opportunities for people who want to have a long-term investment in Tesla. Let's take a look at semiconductors. They have continued to move higher quite nicely. They have broken out just this past week of this major downtrend. And we now have this, you know, we've got this major uptrend. It's fairly steep, but it looks very healthy. Would like to see a little bit more volume here on this move up, but liking what I see here. Some of the individual names in this, AMD, nice uptrend, looking nice, probably coming into a little bit of resistance. Wouldn't hurt for this to take a little bit of a pause, take a rest. NVIDIA is sort of starting to break out of some levels here, coming into a bit of a resistance probably off of this little consolidation. But let's see what happens. You know, a couple of sideways days just under this 100-day moving average, then a breakout would actually probably be very playable. Let's get that, you know, kind of a, you know, so we've got that, it's doing that base on base sort of thing, right? And where we have the base in the top of the base, and you can see the base that it was basing on is sort of right here. Oops, didn't draw that very well at all, but you get the idea. Yeah, keep an eye on this over the next week. See if it does a couple sideways days, and then if it breaks out of that, this could be very playable. It'd be a really nice play on that. And one of the other plays that we've been watching, this PI, this impinge. Remember, I mentioned this. I first mentioned this to you guys down in here. I believe it was the weekend. This was July 1st, and then that's the 5th. Yes. Okay, so it was the weekend update after this red candle, and I said if it can come back up and break out of this, you've got to be in this. And look at the move since then. You know, from you know, you could have got in that at around 60, and we're up to 95 already now in just over a month. Beautiful move in this stock. Can't get in it now, of course, but you know, this is one of the stocks in the semiconductor space that is doing really well, and maybe dragging the rest of them up as people start to take profit on this. Maybe they move their money into some of the others that haven't performed as well, like NVIDIA. We'll take a real quick look at healthcare. Healthcare is doing fairly well. Within healthcare, I think that really if you want to be in this space, you've got to be looking at biotech, which we'll look at in a sec. But you can see we've got a nice little uptrend going, but slowing down up near resistance. Biotech, though, this had a nice, really nice consolidation going on here. I actually played this with Labu, LABU. It's a triple leveraged on biotech. Caught this move from the bottom of the range up to the top of the range, and was sure this is going to roll over, and bought puts on that, and those are not going to work out for me, which is fine. That's why I used it with puts. So it's really, really well risk defined, and I'm fine if those things end up going to zero. That's fine, but I still have some time. And I think that we're coming into resistance, so it'll be interesting to see how it handles this resistance up here with the 200-day moving average. And you can see it's consolidated quite a bit in that area before. Biotech, interesting space to watch. REITs into the defensive stuff. REITs doing fine, maybe a bit of a bull flag going on here, but this isn't a space that really interests me. When the market is showing risk-on behavior, there's no reason for us to be looking at or playing in REITs in any of these risk-off spaces. At least not just yet, right? Consumer staples. That's another one that's a very risk-off kind of space, and utilities. It's interesting to see utilities doing this well, though. So there's still definitely people playing defense in this market. Home builders. The home builders they're just such a choppy mess. I may stop watching these things because they sort of constantly disappoint. They look like they're setting up nicely, and then the moves are small and they don't do much. So unless anybody suggests otherwise, if anybody would be really disappointed if I stop watching these things, this will probably be the last, unless it breaks out of here, this will be the last week that I'm watching these. And I guess that is, I don't have any holdings in any of this space right now, but I guess that would be me capitulating, and that probably means that these are going to go higher now. All right, let's take a look at some of the plays we were looking at last week. The first one is Roblox. We were looking for a breakout of this consolidation, and sure enough it did. This is just a nice smooth move higher. We are coming into resistance, though. We've got some resistance at 53, and we've got this gap here as well. So it'll be interesting to see if it can continue to grind up into there and what happens when it gets there. Disney, we were looking for a breakout of this consolidation, this little base right here. It had a nice breakout, and it just couldn't follow through. It's now pulled back to the breakout level. Often you will see them continue higher after pulling back there. So this could be a second chance to get in. This could be the last chance to get in before this moves higher. Or, it's entirely possible as well. This just fails. It comes right back down to the bottom of this range. If we close below that blue line there, or if we close below the Friday's low, we're definitely coming back down and testing the bottom of the range here, which would be right at 100, which should support. Palantir has made a nice move. This thing is, it's really sort of kind of coming to life, but slow motion. Last week's weekend update, we were looking for this to break out of this above resistance, and sure enough it did. Didn't move that much higher, and it seems to kind of be pausing up here, but looks ready to go and make another little leg up. Square or block, that did break out nicely. We were looking at this consolidation, a little ascending triangle here. It broke out the top of that, moved right back, right up into the next level, very, very quickly. Very healthy price action here. Shouldn't concern us one bit that it paused up at $90 here, pulled back a little bit. This will just need to consolidate maybe for another couple of days. under that 100-day moving average, under that $90 resistance level. But this looks primed to move up into the next zone here, which should be, we might see a tiny pause at 100, but I think this is going to go right through that and up into this 117 to 120 level. And look at the nice increase in volume here on this breakout. It's exactly what we need to see on a stock that is recovering like this and showing us it wants to move higher. So you might be seeing your last chance to get into square here if you're wanting to get in or add to an existing position. So some new plays for this week. I know we've looked at uranium a number of times. This looks ready to make a move higher. You could argue that it started to break out of this bull flag on Friday. Nice move, got good volume there. Would have been nicer if it closed right on the high, but it's definitely closed, in the very top area of its daily range. So this is good. This bodes well for a move higher. And it also says that, maybe you could still get in this here because we haven't even broken out above the top of the flag yet. And some people wait for a breakout above the top of the flag before they get in. So this could definitely fairly easily move up into this $23 level, maybe even into the $24 level. So that's the URA ETF. And Cameco is the big uranium producer in the world. You can see that they gapped up after their earnings back in here. Have been pretty much consolidating, making a bit of a bull flag. I thought I drew that one in. So you've got a bull flag right here. Let's bring that line down there. Okay. And this might actually be a better way to play this than the URA ETF. You might get a little more juice out of this move. Let's duplicate that and let's see if we can come up with a target on this. So the breakout is right there, and that target is this previous high. It's $32. It's not a bad move. So you can get this now from 26 to 32. That's all right. So yeah, this could definitely be playable, but watch out for this all-time high. I believe that is an all-time high on this one. It's definitely a one-year high. Yeah, this is a long-term high right up here. So that's probably that'll probably be the end of the move. It'll probably either pull back like it did before or consolidate at that level. I doubt that it'll break right through that level right away. I'm going to color this in here as a major resistance right there. Okay, so that's Cameco. Jerry in the Discord brought U.S. Steel to my attention. This is another one of those sort of economic bellwether kind of stocks, but it's also could be getting some, this move up here and this little bit of a pop could be off of that anti-inflation bill that seems more like the government just spending more money. So I don't know how you call it anti-inflation. I'm not trying to be political. I'm just saying, if the government is handing money out to people, I mean, that's sort of what causes inflation, right? Anyway, nice bull flag with our bull flag consolidation right under a resistance level where we consolidated before. It looks like it tried to break on Friday and failed. So this might need more time in this bull flag, but don't take your eyes off this. This could make a nice move if it breaks out. Here's one from the pot space. I know that some people in the Discord are holding Planet 13. This thing is starting to come to life. Can we be bearish on the market when the pot sector looks like it's starting to move up? Now, pot has been beaten down so badly that this move looks tiny by comparison, right? But let's look, let's take a close look at what's going on here. We've had this long-term downtrend. We are consolidating with a flag right underneath that downtrend. A breakout of this flag to the upside is going to break the downtrend. And I think we could move quite a bit higher. I mean, this flag targets up here at about 380. So where are we now, right? Our breakout's going to be around $2. So that's basically almost a double to the target on this. But that being said, there's a lot of resistance overhead. There's a lot of people who've been buying the dip on this, and buying the dip kept failing on them. So it could be a tough move to get back up here with all this overhead resistance. So interesting here, what's going on. Very interesting, about the most bullish thing that's happened to this stock in quite a while. Worth a watch, maybe worth a play. Just be careful. Don't. You got to respect your stop on this, okay? Because look how many times this is tried to move higher and then failed. So absolutely have to respect your stop. Keep that stop tight if you play it. Probably just under Friday's low would be a good place. But yeah, this could be a fun little play. And here's one that is a little different from the usual plays that I call out. This is one that I think might go into my long-term portfolio. This is a Canadian stock, ISV, on the Toronto Stock Exchange. You could play this through most brokers. Definitely interactive brokers will have this. This is an interesting play. Now you can see that it's had a nice pop off of earnings, right into resistance here at 23. This $20 level has been really important support and resistance level from the past, right? You can see that major resistance there, but then we finally got through back in, when did this break through? Early 2021. Broke through, came down, we had a test, moved up, and we came back to, we just kind of broke through it a little bit here and a little bit there, but for the most part it has acted as support. So what I'd like to see happen on this one, I would like to see at least a couple more days of consolidation in here, maybe even a week or two. Well, maybe another week in here. Draw this flag, and I will buy the breakout of that flag. Because the fundamentals on this company look great. Now I'm not gonna talk about fundamentals in here because we're all about the TA on this weekend update. But it'd be really nice if somebody who's better at fundamentals than I am took a look at this, and we got a discussion going on this one in the Discord. If not, I'll try my hand at least showing you what I like about the fundamentals on this. But there's some really good metrics going on with this company, and obviously the market liked their earnings, and you can see that their earnings are increasing. It pays a decent half decent dividend as well. I think this dividend is 4%, pays quarterly, which comes out to around 4% right now. So yeah, not a bad play that I think that will end up in my core portfolio. That is everything I have for you today. We will take a look at what we've got coming up later in the week. On Thursday, I'm going to be showing you a cool little play for if you own calls or even puts. You can use it with put. You can do it with puts as well, but normally it's something you do with calls. Let's say you own calls on something. It has earnings, and pops up, makes a huge pop up in the after hours, and then starts pulling back. And you're like, oh man, I wish I could sell these calls right now. But of course you can't, because the options market, closes at 4 o'clock, right? With the regular trading hours on the equities market. But there is a way that you can lock your profit in if you want to. So we're going to be taking a look at that. It's easy. It sounds complicated at first, but once they've been shown how that works, you can see how easy it is, and it has saved me a number of times. Because so often you get these giant pops up, and then they just start pulling back, and it bleeds all night long. It bleeds through the pre-market. And by the time you reopen, it's like right back where it came from, and you're like, well, I had these options; they were worth a ton of money last night, but now they're worth nothing. We can save you that pain. So that'll be on Thursday. I think that's going to be a really interesting session. Of course, the rest of the month we have these weekend briefings as well. Hit that thumbs up, and if you haven't subscribed, subscribe. If you're not in the Discord, you gotta sign up in the Discord. There's a link below. Get in the Discord. You will get the weekend update a day earlier, and you'll get the ticker talk on Thursdays 2 days earlier. So come join us in the Discord. Lots of great discussion goes on there. Would love to see you along. Enjoy the rest of your weekend, and have a great week next week, everybody.